I think UK commercial property offers diversification, so it should be there really as a sensible diversifier in a multi-asset portfolio for its income credentials. So it's about steady income. While we do give good capital growth, and we currently, are in this market, I think it should be bought because people want good steady dividends. When we're looking at assets, and we're looking at a number of assets at any one time in the market, some are on market, some are off market, we're always looking for it to sort of tick at least three of five boxes. So it's location, and we're very southeast centric, so a specific slant to that, the actual quality of the tenant, the length of the lease and the specification of the lease, making sure it's institutional in terms of the lease clauses, and then looking at the specifics of the property, the actual building itself on the ground. Does it need refurbished? Is it in a good state of repair? And they're all sort of factors we're considering as the first and foremost before we even look at the cash flows and the return figures. My outlook for the UK commercial property market is that we're seeing a very strong capital growth at the moment across the whole of the UK market. I would expect that will continue into the first part of 2015. However, I think that it will longer term be more about income, and it'll be more about what you're doing on your asset management and the actual business plans on the specific assets you hold. So I would imagine in the short term we're going to give further good inward yield shift, so capital growth. And the increments on that will shorten, and it will be more, as your total return going forward, it will become more again about income returns, and that being the larger chunk of a component in a total return. The Henderson UK property OIC is really focused at the core end of the market. So firstly, we're very bricks and mortar. We don't massively invest indirectly in REITs. Only less than 5% of the fund actually is invested in REITs. We're much more about tangible assets. So really we've tried to position ourselves at the quality end of the market, and that has been slightly more expensive to buy this year, but it's a very strong, not just asset base, but it's also a very strong tenant base, that part of the market. And we feel that will be what will differentiate us, not just in a market that's very active in investment volumes, but also in a more testing market, and in a market where occupationally it will be about where did you buy? Did you buy in an area where there'll be rental growth, where there's a strong tenant demand? And we feel we've bought in the right locations to deliver that, both over the short, medium, but also the long term, and property really is more of a long term play.